Good morning from whichever side of the world, country you're watching me from. My name is Ian Joseph, lead market analyst at HFM East Africa. Now, quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but don't worry, I'm here to guide you through the entire process the right way. Let's get started. First and foremost, we do have quite a few promotions that are running on. And if you can go over to your HF website, application, whichever of your choice, under promotions, we do have quite an interesting amount of information, bonuses and promotions currently going on. We've just launched the Pure Gold giveaway, whereby you as a trader, you have the chance to walk home with Pure Gold. Now, the competition has 28 days, 2 hours and counting, whereby it's going to be 5 weeks. You have a chance to walk away with 10 grams of gold, and this is how you get entered. Step number 1, go over to your HF website or application under promotions to the Pure Gold giveaway. Trade 100 standard lots in gold using any account type, and you have a chance to win 10 grams of pure gold. So if you do click on the register now button, it's going to put you to the promotions. We do also have the Fast 5, whereby there's going to be a prize pool of 325,000 Kenyan shillings. Now, we do have only 9 days, 13 hours remaining for the competition to end, which is going to end on the 19th of September, whereby it's not only a marathon, it is a sprint, whereby speed is everything. The first to trade will be the first one to win. Now, the grand prize is going to be the first 5 people walk home with 65,000 Kenyan shillings. And once again, how do you join? You go over to your HF promotions, the first 5, and click on the join promotion. You have to trade 150 lot size in either forex, gold, or silver, or using any other trading account. Be among the first 5 traders to complete the trading requirements by 19th of September and win 65,000 Kenyan shillings. The other promotion that we do have is Battle of the Elite. Now, this one is very, very interesting. Round 1 is going to be from 1st till 30th of September, whereby the first person is going to walk home with 650,000 Kenyan shillings. Number 2, 260,000 Kenyan shillings. Number 3 is going to walk home with 130,000 Kenyan shillings. We are going to have 10 winners on the lucky draw, whereby you are going to have a chance to win yourself $200 each. Now, once again, how do you join? You go over to HF Promotions, Battle of the Elite, and join the promotion. Open a Battle of the Elite trading account and deposit at least $100, which is equivalent to 13,000 Kenyan shillings. Trade any asset and rank in the top 3. Now, looking at the current leaderboard, it's very interesting, whereby number 1, we do have Lawrence with 419.19%. Now, remember, this is going to be updated once per day. So as of yesterday, this is how the table looking like. Muitalan at the bottom, number 10, current, not at the bottom, but number 10 with 7.5% gain on their account, respectively. Once again, the promotions are time limited. Purpose to join. I shall see you on the other side. Now, where everything usually begins for us, the HFM website, whereby under tools and education, economic calendar, this is the best economic calendar that you're ever going to get. Now, we are going to look at the data, what this means for us traders. Now, if I can switch gears to 10th of September, which is today, yeah? Now, yesterday we were anticipating revisions for the non-farm payrolls, and you're going to look into the data, whereby actually the data was really worrying. We had the most amount of revisions ever recorded, with 911,000 fewer jobs through March 2025 than initially reported. Now, when you go to the economic calendar, let's say, for example, you want to look at NFP numbers, and I want to specifically locate August's first number, which was NFP, technically speaking. The 1st of August was NFP. Now, when you look at this piece of information under the non-farm payrolls, we do have revisions usually. When the data is released to us, the public, there's usually a revision. Now, looking at it currently at the moment, the numbers were revised from 147,000 to negative 13,000 jobs. This means that, okay, As a result of the survey, remember when NFPs are released, it is a survey. But as time goes on, there is usually revisions of this number as a result of taxes and so on and so forth. Let's say, for example, if there were speculations that 10 jobs were created, as time moves on, they are going to follow up on these 10 people. Are they going to pay taxes? There is a data which usually revises it. Now, as a result of the revision, we are going to get a clear understanding of how the job markets are currently at the moment. So on 1st of August, we did receive this data whereby there was a revision from 147,000. Now, when we did receive NFP's number last week, the data was revised further. Okay. Previously, it was 22,000 jobs, but it was revised down even further to negative 13,000 jobs, whereby we initially anticipated that, okay, 147,000 jobs were created in the United States, but actually, as time went on, there was massive revisions. Now, this usually has a very big impact in the market because we initially thought almost 1 million jobs were created. But as a result of the revision, we are like, okay, these jobs are no longer there. Now, this is very interesting. If you look at the article, the US added 911,000 fewer jobs than first estimated for the year to March 2025. The BLS, which is the Bureau of Labor Statistics, announced yesterday, highlighting recent concerns about the health of the labor market. Now, the revisions were 50% higher than last year's adjustment and were on the higher end of Wall Street estimate between 600,000 and 1 million jobs. Now, the revision comes after a lackluster August jobs report with only 22,000 jobs being added in the United States. That report too contained the revisions that we have just looked at and noted that 13,000 jobs were actually lost. Now, we did anticipate 147,000 jobs were created, but actually as the revisions happened, there was like, okay, we actually lost jobs. We didn't create jobs in the United States of America. The first negative jobs report survey since December of 2020, the unemployment rate also did increase to 4.3%, the highest rate since COVID region. Now, Donald Trump did fire Erica McEnteffer, the Commissioner of Labor Statistics, actually when the data was released on the 1st of August. And then there was massive revisions. Donald Trump did send this guy packing home. He was like, we are not having these anymore. After a weak July job report that he claimed without evidence was rigged in order to make the Republicans, and especially, quote, Mr. Donald J. Trump look bad. Now, but while these revisions to the job data are large, they are not unusual during periods of economic change, such as the introduction of tariffs and the arrival of AI in the workplace. Economists note that businesses often take a longer to reply to the BLS surveys, leading to gaps in their data. Now, we have had quite an interesting amount of news releases of late, and this was one of the things that we wanted to look at, especially coming from the most recent NFP numbers that has shown for the first time in 4 years, whereby the data has actually come out lesser than 100,000 jobs being created in the United States of America. This could be quite worrying, and Mr. Donald J. Trump was didn't take blame of it because he was like, okay, maybe this could be something that happened way before I took office, and he didn't want the blame on him. That's why he did fire Erica as a result of the massive revisions on the NFP. Now, the data has an impact on the markets because investors are going to look at this information. Central banks are going to look at this information, especially Mr. Jerome Powell, whereby the two main mandates of a central bank, number one, is to maintain full employment. Number two is to maintain inflation in between the 2 and 3%. Now, if the data comes out worrying, it means that in the near future, we do anticipate interest rate cut, which is going to be on the 17th of this month, which is going to be exactly 7 days from now, whereby we do anticipate the Fed Reserve to cut interest rates, but by how much is what we don't know. Now, looking at the data that we have just received, could there be a probability that we might see further interest rate cuts than the markets are projecting currently at the moment? Well, there's only one way to find out. Now, looking at data currently at the moment, today we did have Israel attacking Hamas, who are in Qatar. And this comes at a very critical time because explosions were heard in Qatari capital as Hamas leadership was actually targeted. Now, one thing to note is that it is said that there were over peace missions whereby they were talking about reconciliation But all of a sudden, there were launches from Israel against Hamas leaders in Qatar. Now, this happened on Tuesday, expanding its military actions that have ranged across the Middle East to include the Gulf Arab state where Palestinian Islamist group has long had its political base. Qatar, which has acted as a mediator alongside Egypt in talks over ceasefire in the almost 2-year-old war in Gaza, condemned the attack as cowardly and called it a flagrant violation of international law. Now, they were negotiating a ceasefire when the attack did happen, which followed an evacuation order in Gaza City, where Israel is waging an offensive to try to destroy the group and its military capabilities in the Gaza Strip. Israeli officials told reporters that the strike was aimed at top Hamas leaders, including Khalil al-Hayya, its exiled Gaza chief and top negotiator. Very interesting. The attack took place shortly after Hamas doing the Al-Qassam brigades claimed responsibility for a shooting that killed 6 people at a bus stop on the outskirts of Jerusalem on Monday. The assault is likely to deal a serious, if not fatal, blows to efforts to reach a ceasefire, especially since the negotiations did take place in the Gulf Arab country of Qatar. Now, Qatar are a U.S. ally, and these attacks come at a very critical time whereby they were talking about a ceasefire and then all of a sudden they were bombed. At least 6 people did die, but the leader is alleged to have survived the attack. Now, once again, this comes at a very critical time. Why? When you look at the Middle East, they do have a lot of resources. They do have, in terms of oil, in terms of energy, the Middle East supplies almost 60% of the world's oil supply. Now, this is going to affect supply and demand if at all the wars does continue. Remember, once again, we just looked into the attacks that Russia had on Ukraine on Monday, whereby it did bomb a government building. And Donald Trump did mention about further sanctions of oil prices for people who are buying oil from Russia. And who are these people? It is China and India. China and India have been buying oil directly from Russia. Now, today when we woke up, there has been this war that is continuing for over 2 years, whereby they were having a discussion of a ceasefire. Then all of a sudden, bombs were dropped. What does this mean for the markets? What does this mean for you as a trader? It means that oil prices are more likely to be affected in the long run because of supply and demand. We shall see about that as we go into the charts in just a moment's time. Now, today in the morning, we did have, let me refresh my page here. We did have CPI numbers coming in for China, whereby the data, let me refresh the page. Okay, we're supposed to be here. Whereby the data did come out actually negative compared to the consensus. We had a consensus of 0.2%. Actually, the data did come out much lesser than anticipated at negative 0.4%. Now, CPI numbers are a very good gauge in terms of inflation, where they look at how consumers are basically buying on the markets. Now, when you look at China, China is a very interesting economy whereby they do depend a lot on exports compared to imports. So how money moves in a country is very important to currency valuation. Now, if you look at China, once again, if the data does come out negative, it means that, okay, people are not consuming as much as possible. And this is something that China has been facing for quite some time now, whereby they've been trying to make their people spend money. Now, if people spend money, it means that a lot of their currencies are going to be in circulation, which means that it is going to be a stronger currency in general. So the CPI numbers did come out negative today. Now, once again, this data is a year-on-year release, but we were looking at the month on the monthly basis, whereby this measures the changes in price level of consumer goods and services purchased by local residents. The CPI is a key indicator to measure inflation and changes in purchasing trends. The year-on-year reading compares prices in a reference month to the same month a year earlier. Generally, a higher reading is seen as bullish for the RMB and a low reading is seen as bearish. Looking at the data from where we are from, the highs we did have was at 2.8%. This was back in 2022. Currently, at the moment, we are well below 0.2, negative actually 0.2. Now, Once again, consumer price index is very important to a currency valuation, because look at it from this example. Let's say I'm a tomato farmer. There is usually the producers and the consumers. Now, if I'm a tomato farmer and then prices of tomatoes are very low in the market, would I want to plant tomatoes next year? There's a high probability I won't, because technically I'm going into losses. But at the same time, it's going to favor the consumer because they're going to get these products at a cheaper price. But as a result of getting them at a cheaper price, it does impact into profits. And when you look at China, China do produce a lot of goods and services. So the CPI numbers that have come out today actually shows us that, okay, we were anticipating more money to move in the economy of China, but actually we have been seeing a decline, and we'll want to look at how this is going to have an impact in future prices. Now, the highlight of the day today is going to be none other than PPI numbers. Now, today is going to be PPI, tomorrow is going to be CPI. Both of these are inflationary numbers. Once again, the PPI is going to look at producers. Now, the core data is going to exclude food and energy. Then the data itself is going to include food and energy. Why do they exclude food and energy? Because food and energy tend to be very volatile, and they tend to distort the underlying measure of what is happening to an economy. Once again, going back to tomatoes, let's say there was an outbreak of a disease in the whole country. The tomato industry will be affected. Yes, but does that mean the whole economy will be affected? No. So that's why we tend to receive two sets of data for any news release, whereby there's one, especially for inflationary numbers. Now, the PPI excluding food and energy, which is going to be the core data. And then we do have the data itself, which is going to be released at exactly at the same time, which is going to include food and energy. Now, if you look at our HF website, you do see this one is a medium impact or moderate volatility expected. Now, when you look at it on the excluding, which is the core data itself, this is the higher volatility expected. Now, investors tend to look at this data more because, once again, it tends to exclude products such as food and energy in order to capture an accurate calculation. Now, what is the usual effect? A higher reading is usually seen as positive for the United States dollar, whereas a low reading is usually seen as negative for the United States dollar. Now, if you look at PPI, these are producers. The United States produce a lot of goods. Now, if they produce a lot of goods, that's step number one, okay? They have to also sell those goods. So today we are going to look at producers. How are producers faring on in the United States economy? Are they producing? If they're producing, then it means we are headed in the right direction. Now, tomorrow we are going to look at consumers, which is CPI, whereby we are going to look at, are these consumers buying those goods that are being produced? So this is a gauge of inflation. Remember, once again, the more money moves in an economy, especially the United States, which is heavily dependent on consumption, whereby we are just due to release the iPhone 17. Now, this data is going to look at those companies. Are they producing those goods? Production, remember, is step number one. Consumption is step number two. Now, the data that is supposed to come out today, we do have a previous reading of 3.7%. We do anticipate the numbers to go slightly lower. Now, remember, this is a consensus. The actual number has not yet come out. So when the data does come out, if it does come out greater than 3.5, it means that, okay, the economy is expected to move in the right direction. If it does come out lesser than 3.5, it means that, okay, producers are not producing as much as economists would want them to. Now, this is going to have an impact on prices. And once again, the data is not yet released. It shall be released at exactly 15:30. This is local Nairobi time, whereby sometimes it's going to change depending on the location of where you are. Now, looking at it, once again, this week is going to be inflationary numbers. Last week we had employment numbers. Usually the first week is employment numbers. The second week we are going to receive inflationary numbers, which is the PPI, then the CPI. Then 8 times a year, on the third week, we are going to receive FOMC meeting, which is due to happen next week. If I can go to my chart here on the 17th, which is going to be exactly 1 week from now, we do anticipate the Fed Reserve to come down at exactly 2100 hours, which is once again local Nairobi time, whereby we do anticipate the interest rates to be released. Currently at the moment, we know that we are anticipating an interest rate cut, but by how much, the magnitude of the interest rate cut is still unknown. Now, looking at the data of which it has been released currently at the moment, this could be worrying. Could we see much more interest rate cuts than what we are anticipating currently at the moment. There is a very good website that I look at. It's called the FedWatch tool. As you can see, the next FOMC meeting is going to be in the next 7 days, 10 hours, whereby, let's wait for the chart to load. There's a 91.7% chance that we might see an interest rate cut in between 400 and 425 basis points. Now, the data is usually revised as time goes by. If you look at this information, after NFP, we did have a probability being taken up, whereby there is now an 8.3% chance we might see an interest rate cut between 375 and 400 basis points. Now, this is going to be for the next meeting. The other meeting that is going to be happening will be on 29 October, which now the statistic has jumped up to 68.9% chance that we might see interest rate cuts being taken down even further to 375 and 400 basis points, while also there's a 6% chance we might see a further interest rate cut. We are going to have three FOMC meetings this year, and the last meeting is going to be 10th of December, whereby there's a 62.2% chance interest rate cuts may be taken back down to 350 to 375 basis points, while there is a 5.4% chance we might see interest rates being taken further down to 325 to 350 basis points. So one thing is for certain, we are going to anticipate those interest rate cuts, but by how much is what remains unknown. And for us traders, this provides us with an opportunity to look at this information. How can I find opportunities in the markets as a result of this information? Now, when you're looking at interest rates, lower interest rates usually weaken the economy. Higher interest rates usually strengthen the economy. Now, moving over to the charts, which now we want to get a bit more technical. Remember, we have just started a segment whereby I would want you to be engaging with me. What are some of the assets that you would want me to be looking at? Because remember, when you look at my watch list, I do have quite the several amount of pairs that I usually look at, but it's not possible for me to go through each and every one of them. I would want you to pick the pairs that you'll want me to look at. Also pin in the comment section where you're watching me from. I'd like to know where you are watching and hearing me from. Now, looking at the stock heat map, Nvidia is up 1.46% on the day. Google is up plus 2.39%. Meta is up. Amazon is up at the moment. Currently, at the moment, the stocks are really flying currently at the moment in the United States of America. Why? Because they will thrive as a result of the lower interest rates. Remember, these companies do depend on debt. So if they are going to lower interest rates, it means that the current debt that they do have, they are going to pay it at a much cheaper price, while at the same time, it's going to provide them with cheaper loans so that they can borrow and invest more. When you look at there was a meeting that Donald Trump had last week with the top tech gurus, top tech CEOs, and there is a total of almost 3 to 5 trillion that they want to invest in the United States of America in the course of the next 2 to 5 years. That's quite amount of money, which means it's going to create more job opportunities. It means that the economy generally will be seen to be headed in the right direction, which lower interest rates will favor them as a result to increase their profit margins. Now, going over to the charts, starting off with gold on the 1 hour time frame, gold has been really buying. Gold did break all-time highs. Currently, yesterday we did form an all-time high. This price action that we are seeing here was the result of the revisions of the NFP numbers, whereby we did see gold tap into a high of $674 an ounce. Uncharted territories. We have never been here before. Now, looking at price action currently at the moment, the data that is supposed to be released later today is going to affect prices, whereby, once again, if the data does come out negative, it means that we are anticipating a weaker dollar, which means there's a high probability of prices moving further to the upper side. But on the other hand, if the data does come out positive for the dollar, it means that gold will tend to be weaker, come back down to fill these levels of inefficiencies that we do have residing below these levels. Once again, this is going to be dependent on the data that is going to come out today and tomorrow, especially looking at what we are anticipating the FOMC. The markets already are pricing in the interest rate cuts at the moment. If you look at ever since 1st of August, Where was 1st of August? Here was 1st of August. This was when the NFP numbers were released and it was negative. We did see gold break out of this channel as a result of the negative NFP numbers, and we have been pushing quite aggressively to the upper side, forming higher highs, higher lows, higher highs. Currently, we are at all-time highs, and we will want to look at the ceiling has been broken. The next question that begs is, where could the next price point be? Now, whenever you're looking at gold, especially if you break all-time highs, there's usually a tendency of gold moving to regions, psychological levels, essentially, whereby 3,700, 3,800. If you look at gold, did linger about the $3,500 region for quite some time. Then it broke out to 3,600. We have just broken above 3,600. You can see how here, when it broke to the upper side, it moved to form a new all-time high. Now, currently at the moment, we're asking ourselves, yes, we have broken $3,600 an ounce, 3,700. Could it be a likelihood? There's only one way to find out in the financial markets. Now, looking at silver and gold are very positively correlated, whereby we did see, as a result of the commitment of traders report, the institutions, big hedge funds, the big participants in the markets have been buying aggressively into precious metals. Why? Because they're looking at safe havens currently at the moment. Because if we know that there are going to be interest rate cuts in the near future, technically speaking, this is going to provide a weaker currency in terms of treasuries, and bonds are going to be less attractive. So investors will want to park their money into assets that are going to be safer haven, yielding much more return currently at the moment. Now, these safer metals, these safer assets include metals like gold and silver and other currencies. We shall look at other currencies currently at the moment in just a few moments' time. Now, looking at silver, we have entered into a period of consolidation. Yesterday, we did break above, forming a high of $41.6 an ounce on silver. Once again, this is an all-time high. Prices have never been to this territory, and this is a good sign that, okay, institutions are offloading their positions in the dollar. They're looking for other assets that are going to be safer havens that will yield much more in return. When the Fed do decide to cut interest rates, it means that once again, we are anticipating a weaker economy. Looking at the dollar index yesterday, we did have a strength in the dollar, and this is quite interesting. Looking at how the dollar did gain slightly before the inflationary numbers were released out today. If the inflation numbers do come out positive, then this could justify the move that has been happening on the dollar index currently at the moment. Now, the VIX has been playing around quite aggressively ever since last week opening price. This was last week, Monday, 1st of September, whereby we did have a spike to the upper side, but aggressively the volatility index did move aggressively to the downside, losing almost 23.78% from the highs in less than 7 days, 18 hours, meaning that institutions, the markets could come back down, moving into normal market conditions. Now, looking at indices, US 500 has just broken the all-time highs that we were looking at currently at 6,533, whereby the candlesticks are now trading above this region. Quite interesting, noting how the markets are digesting also this data. Remember, once again, these companies, they do depend a lot on debt. If the Fed Reserve are going to lower interest rate, it means that these companies are going to get much more in terms of profit margins, because they're going to pay their loans cheaper and they're going to get access to more loans at a cheaper price, which usually is positive for equities. Now, the data that is also due to come out today, it's about producers. When you look at the top 500 companies in the United States of America, and going back to the stock heat map, these companies do produce a lot of goods. When you look at energies, utilities, producer manufacturing, transportation, if the data comes out positive today, it means that these 500 companies in the S&P, when you look at the Russell is the top 2,000, not top 2,000, but it's the 2,000 medium cap stocks. So the Russell is a good gauge of looking at how the economy is doing. Currently, most of the companies are in red, but looking at it, this is the 2,000 medium cap stocks in the United States of America. If the data does come out positive, it means that these companies generally are producing goods, which is good because you have to produce goods first. Remember, that's step number one. Step number two, you have to sell those goods. Now, that will be today's data, looking at the producers. Then tomorrow, we are going to look at the consumers. Are they purchasing what the producers are essentially giving to them? Now, going back to the chart, the S&P 500, the US 30, the US 30 is at a region of interest currently at the moment, whereby we are at a region of resistance, whereby prices has been struggling to break this region, and this is quite interesting to note, because whenever prices creates liquidity around these regions, if we do have a candlestick that closes above, this means that the ceiling will be broken and prices might continue moving further to the upper side. Now, this is also going to be dependent on the data that is going to be released today, whereby if it does come out positive, it means that prices are likely to move to the upper side. We have looked at the Russell, the US 30, US 500, all of these are equities, and once again, they are positively correlated, whereby if one moves to the upper side, there's a high likelihood others do follow suit. Now, looking at Brent oil, oil, black gold, essentially as it's known, oil is very, very important to an economy. Basically, any economy to the world is tied to oil, because when you look at transportation, when you look at livelihoods of mankind, we do depend a lot on oil. Now, this energy is very important. When you look at it from supply and demand perspective, we have seen ongoing wars in Russia. Currently, at the moment, Qatar have been bombed, and we are looking at, could this affect the supply and demand of oil? Whereby, remember, Russia do produce a lot of oil. The Middle East do have a lot of oil reserves. So whatever happens in these two countries, or the geographical locations where oil is, there's a high likelihood it's going to affect prices. Now, looking at how Monday did open, Monday opened with a gap to the upper side, pushed aggressively. We had a short-term retracement, trading back into the new week opening gap. Now, currently, prices are moving further to the upper side. Today in the morning, we also did open with a gap to the upper side. This shows us that, okay, the demand for oil could be affected, maybe driving prices further to the upper side, if at all Russia is sanctioned by the United States, which Donald J. Trump did mention. He's considering more sanctions against Russia, whereby this will affect oil prices, driving oil prices further to the upper side. Currently, at the moment, we are trading at $66 a barrel, and could $70 a barrel be a likelihood target? Remember, once again, psychological levels. Now, as a trader, we react to prices. We don't know what the next candlestick is going to be. As a trader, once again, we do react to prices. Now, when you're looking at this information, we ask ourselves, what could this mean for me as a trader in terms of looking at opportunities in the markets? Now, looking at Western Texas oil, which is positively correlated to the Brent. Now, Brent is mostly crude oil. WTI is more of the refined final products. Now, this one usually has a lot of spikes if you look at it, because technically this is how the algorithm delivers itself. But looking at it, we are making currently higher highs, higher lows, higher highs, higher lows. Could the markets break the most recent high potentially to move further to the upper side? Now, this is this is the point whereby I would want you to engage with me. If there are any more questions, if there are any questions that you would want me to look at. Betty Mutetia, thank you for being the first one to join the live. Pinky Joy, hello. It's Nyaga, hello. Mr. Kiza, hello. Do you think price action is the best strategy? This is a comment. This is a very good comment from Tony. It's a question, Tony Legendary. Do you think price action is the best strategy? Yes. Looking at how candlesticks print, remember you're looking at a chart of price against time, okay? It's a chart of price against time. Now, time is constant. Prices usually move with an element of unpredictability to it. So these candlesticks usually show what the entire world is thinking at a particular moment in time. When you see a larger candlestick with a very big body and smaller shadows, it shows you that there is big volume in the markets. If you see a candlestick that has smaller bodies and larger shadows, it shows you that there is a lot of indecision in the markets. Now, one thing I like and reinforcing is that every strategy does work. Every strategy on earth does work. It just depends on how you apply it. For some people, price action could be the best. For some people, fundamentals could be the best. For some people, Sentiment could be the best. It just depends on you as a person. Tony Legendary, hey, I would advise you to buy shares, stock on iPhone since iPhone 17 is coming out, buy shares of it. Yeah, who knows? Who knows? Who knows? There's only one way to find out, huh? Kefa, hello. So Faye is asking, hey, I'm asking if I go for physical class at Westlands, will I find someone? Yes, you're going to find me. I'm always available at the Oval Office, Westlands, 5th floor of Ring Road. Any time of the day between 8 a.m. and 5:30 p.m. in the evening, you shall find me on the classes. The classes, remember, once again, are fully sponsored by HFM, the best broker in the world currently at the moment. I have an inquiry that wants physical meetup. Yeah, Faye, come through, come through. I shall be glad to be of assistance. Now, we are celebrating our 15 years in the markets. Quite astonishing, quite astonishing. This is a reminder, this is a statement that whatever we are doing is the right thing. And it is made possible by you, the traders, whereby we wouldn't exist if you were not there. And we want to take this opportunity to congratulate you and return back by we are launching a new website for you. It's been in the making for quite some time, but I want to officially announce that our website is now live, celebrating 15 years as a broker globally. 15 years of having you by our sides once again. You, the traders who made this possible. HFM, we have gained the trust of over 4 million traders around the globe. That's quite astonishing, and we are growing. Now it's time to help you go further, trade smarter, and stay ahead of the markets. Your edge is waiting. Check out the celebratory, and if you have a friend who is thinking about trading, remember, once again, you know where to start. We also do have, under the promotions, if you go to the promotions website, there is a refer a friend, whereby you have a chance to win up to $200 from referring a friend. And who is new to us and wants to trade with us, we are going to take you through the right way in trading the financial markets. I'll be there to guide you. There is a link that will be pinned to this live, whereby the new website, once again, is officially launched for you as the traders. Thank you for being part of us. It's our pleasure to be at your service. Now, we do have the Nairobi Traders Clinic, which is going to be for beginners from 15th to 17th at the Nairobi Garage, Spring Valley. This is a good chance for you to get started in the financial market. This is the best chance, the best time for you to trade the right way. Get the money, get the skill, the money usually follows. That's going to be it for me. If there are no more questions, I shall see you. How much is it for the physical classes? Once again, the classes are sponsored by HFM. You don't need to pay a single shilling. We would want you to trade the right way. And I'll tell you why. It's fully sponsored. You don't need a single shilling to pay us for you to be educated in the financial markets, okay? So come join us. Tag along a friend. If you tag along 10 friends, who knows? I might give you $100. Stay safe. Take care of yourselves, huh?